So in this video, we're going to discuss Walmart. I'm going to go over a lot of different factors and whether or not Walmart is a buy, a hold, or a sell for 2025 and going long term as well. So as far as latest news on Walmart, they do hike sales and earnings outlook even as they say the tariff costs are rising. So they raised their full year earnings and sales outlook, which is a positive, of course. The company has started to raise prices on some items but has kept others unchanged. That may get worse and worse over time for customers as these tariffs start to really factor into a lot of their different products. So obviously their business model has been built for decades on having the lowest prices, being an all-in-one place to shop for basically all your main needs. And, one of their biggest rivals, of course, now is Amazon, which has taken a big part of the market share, but they are still pretty much the two top dogs, especially in the United States and in many cases worldwide for retail. So they have, innovated over the years. They started doing in-store pickup and faster delivery to compete with sites like Amazon, of course, a marketplace expansion, again, to compete with Amazon, allowing third-party sellers. So they're able to have a lot more products now, of course. They also have private label brands like Great Value, where they basically make their own version of groceries and things like that. They have membership clubs like Sam's Club, advertising, financial services, and more. So again, we mentioned guidance a little bit. They are apparently bullish on guidance. So after their Q2 2025 results, they basically did not release specific Q3 2025 guidance, but rather updated its full year guidance. Expected adjusted earnings per share between $2.52 to $2.62 after reporting Q2 adjusted EPS of 68 cents against a prior forecast of 74 cents. They saw revenue growth driven by strong U.S. grocery and health and wellness sales, along with a 25% increase in global e-commerce. But the stock fell due to the earnings miss and one-time charges from legal and restructuring costs. So if you look at their stock page here, you can see quarterly financials here. Net income, diluted EPS, and net profit margin were down, and revenue was slightly up. So basically how they're doing lately. 6 months, they're up 3.37%. Year to date, 7.59%. Over the past full year, 28%. And over the past 5 years, they're up 120.67%. So if you would compare this to the S&P 500, which is kind of the whole point of why you would want to buy individual stocks is to do better than the S&P 500. If you look at the past 6 months here, Walmart is behind the S&P 500 year to date. They are behind. If you look at the past year or so, they are a little bit ahead. And over the past 5 years, they are also ahead. So if you had them 5 years ago, you would have been beating the S&P 500 by around 30%. And that's not too bad. If you look at the dividend yield, it's not a huge dividend, but it's something. It's not too bad. It's a little bit of a payment, for being a shareholder, just under 1%. PE ratio, again, not the end-all be-all. We'll look at a few different alternatives to the PE ratio in a minute. But 36.53 is a little bit high, especially for, a stock that's not really known for being a high growth tech stock or something like that. A lot of investors look for something around 20. And if you look at assets versus liabilities, they are not quite at a 2-to-1 ratio or better yet. I mean, they're not necessarily like too close to breaking even on that, but I would like to see it be a little bit better. Return on assets at 6.82%, actually pretty decent. Return on capital here, not bad either. And if you look at their price to book, doesn't seem too bad at 9.34. Another thing I like to look at is how they've done over the past 3 months or over the past quarter of a year. And you can kind of see sometimes a trend with that without being too short term to where one little spike can completely change the trajectory like you would have in 1 day or 1 week or maybe even just 1 month. So I like to look at the past 3 months as well, and they are up only 0.41% over the past 3 months, so not doing much lately. If you look at the PE ratio, according to Robinhood, it's right about the same as the one you see on Google Finance. Sometimes they differ, but in this case, they are relatively the same. If you look at what hedge funds are doing, you can see that hedge fund ownership of Walmart increased by 324,000 shares versus Q1. But if you look at Q2, 64% buy, 36% sell. Q1, this says 10% buy, 90% sell. So that's just for this year so far. And then you've also had 4 informative sells of 9.6 million shares of Walmart in the past 3 months from insider. Now, as far as what analysts are saying, analysts are actually saying it's a good time to buy Walmart. 95% out of 43 analysts on Robinhood here are saying it's a good buy. 2.3% say hold, 2.3% say sell. Now, if you look at earnings here, they were doing pretty well, but then Q2, not so great. I believe some of these dates are off. I think they have some sort of error here because obviously we don't know Q2 for 2026. It's not even 2026 yet. But if you look here, Q2, which I assume is supposed to be for 2025 here, is a miss. Now, this could be the beginnings of the effects of tariffs, for all we know. I also like to look at the EV to EBITDA. So this is a good alternative to, say, a PE ratio. We looked at 2 different PE ratios from 2 different sources. They're about the same, around 36. Well, you can also avoid some trickiness that some companies use to make their earnings look higher than they actually are using accounting and other types of tricks. So if you look at just kind of more raw numbers, you're looking at enterprise value versus earnings before interest, taxes, depreciation, and amortization. You're looking at an 18.72 average or so, something in that ballpark. And you can also look like today, 18.93. Either way, about the same. But they say relatively that is worse than 84.67% of companies in retail. I also look at the PEG ratio, another kind of alternative to something like a PE ratio because it factors in, growth over time instead of just price to earnings. So with this one, the forecast 12-month forward PEG ratio for Walmart is actually pretty high at 4.75. If you look at the PEG ratios for a lot of other companies I've been covering, a lot of them are closer to like 2, maybe 3, and many of them are around 1.5. So 4.75 is actually pretty high. The only ones that I've covered recently, I think that are higher than that, it looks like are Reddit, maybe Costco, and something like Tesla. So you can kind of think about what you feel for those stocks. But that's just something, again, it's just one indicator of many, but it is one indicator that would hint that they are a little overpriced right now. Now, if you look at earnings per share over time, they are projected to improve over time still, but they did miss. It says Q3 2025 is a miss right here. So they apparently reported that on the 21st of August. So this was just reported very recently in the past couple days. So unfortunately, again, they missed, and this may not be a trend going forward, but again, it'll be interesting to see how tariffs are going to affect them because we know these tariffs are probably going to be in place at least for the next 4 years while Trump is in office. Now, another thing I like to look at is how do people rate working here? Is this a well-managed company? Do they take care of their employees? What's their leadership like? I think one of the best ways to figure that out is to see what people who actually work in the company say. So if you look at reviews here, they have a 3.4 out of 5-star rating overall for what it's like to work here. That's pretty average, pretty mid. 55% would recommend working here to a friend. That's only about half. Could be a little bit better. And the approval rating of the CEO, 58%. Just over half approve of the CEO as well. Now, obviously, they have a lot of reviews. They have a lot more reviews than most companies would just because so many people work for Walmart. And that could be a big part of that as well. But normally, I'd like to see a little bit better numbers across the board for employee scores at a company. Now, with all of the different factors I like to look at for a company, some of which are easy to quantify, some of which are not. Some of this is also like, well, what do I think the future is going to look like and how does Walmart play into this? What is their competition going to look like in the future as well? I actually, at the end of the day, right now, if you're asking me here in August 2025, I have Walmart as a sell, unfortunately. If I had Walmart stock, I would probably think about getting rid of it. Tariffs, whether, we had them on pause for a while, many of which are going to still go into place. And I think a lot of these tariffs are just going to settle in and be the new normal for a while. And that's going to hurt companies like Walmart that have built a reputation on having the cheapest prices. So they already have a lot of competition from Amazon and Costco and companies like that. And I'm just not sure what major innovations Walmart would make to help them try and outperform the S&P 500. I would just rather have the S&P 500. If I had my money in Walmart, I'd probably just take that and put it in the S&P 500. But none of this, of course, is financial advice. Obviously, you need to do your own research, talk to your own financial advisor, figure out what's best for your specific situation. But this is maybe just a few things that you can use for your overall research to give you some factors to think about when it comes to Walmart stock, whether you should buy, sell, or hold.